Hi everyone. Today the chapter we are going to discuss is the Reserve Bank of India Act 1934. This is Prem. Before going into the chapter, we'll go into a brief history about the Reserve Bank of India. Reserve Bank of India was established in the year 1935 under the Reserve Bank of India Act 1934. So it was started with a shareholders bank with a paid up capital of 5 crore rupees. Paid up capital is the amount invested at the time of starting the company. The name of the bank when it was started was Imperial Bank of India. It is also known as the principal bank. Principal bank means it's a leader of all other banks. So after the Second World War, there was an intention to nationalize most of the central banks in all other part of the country. I mean, all other part of the world. The same way, even India wanted to nationalize our RBI. The preamble of our RBI states to regulate the issue of banknotes and keeping of reserves with a view to secure monetary stability in India and generally to operate the currency and credit systems of the country to its advantage, to have a modern monetary policy framework, to meet the challenge of an increasingly complex economy, to maintain price stability while keeping in mind the objective of growth. The meaning of this is it will regulate the banknotes so that there is no excess supply of banknotes. At the same time, there is no lesser supply. If there is excess supply, it will lead to inflation, and it will also manage the credit system of the country. Credit system is nothing but lending for loan or receiving deposit, and due to the increased complexity as the day goes on, its monetary policy also should be in sync with the complexity of the economy. So next we'll come to the objectives of the Reserve Bank of India. One of the objectives of the Reserve Bank of India is to maintain the exchange value of the rupee. Exchange value of the rupee is nothing but what you get in exchange for a foreign currency. Like take an example of US and India. If we are receiving $1 from US, we are supposed to pay $75 to 75 rupees to them. This is what is called as exchange rate. RBI is also has to maintain this exchange rate so that it doesn't go too high, or at the same time it doesn't come too low. When it is too high, then the importing will be very expensive. If it is too less, then exporting will be very expensive. Then the second one is to maintain economic and financial stability. The third one is to act as the agent of India at International Monetary Fund. So India will be represented always by the Reserve Bank of India. Someone from Reserve Bank of India will go as a representative from India's side to advise the government on economic matters whenever it comes to decisions taken on any financial matters or economic matters. The government of India will ask the advice of the Reserve Bank of India. Reserve Bank of India will act as an advisory body for our country. It also acts as a banker to government of India. As an individual, we go and deposit our money in any other bank. In the same way, the government of India deposits its money in the Reserve Bank of India. But Reserve Bank of India doesn't pay any interest on the deposits by the government of India, but it manages all the financial activities of the government. It also acts as a banker to other banks. To say, I mean, every bank are supposed to keep a certain reserves in the Reserve Bank of India, and it also has to follow the guidelines given by the Reserve Bank of India. The composition of board of directors. We have a governor there, and we have deputy governors as well. And the composition of board of directors means it's nothing but the organizational structure. We have one governor, and there are four deputy governors appointed by the central government, and there are four directors nominated by the central government, one each from local boards. Local There are four local boards in our country. One is in western region, eastern region, northern region, and southern region. They have headquarters at Bombay, Calcutta, New Delhi, and Chennai, and these headquarters are known as local boards. And each local board consists of 5 members each, appointed by the central government. Apart from these four directors, there will be another 10 directors nominated by the central government of India, and these directors will do the functions assigned by the governors. Local boards, as I already said, they represent. They have headquarters in the four regions of our country. These are called local boards. See, the local board consists of 5 members in each local board, and we'll come to the functions of RBI. One of the main functions of RBI is issuing currencies and regulates money supply. Issuing currency is nothing but printing notes. It prints notes from rupees 2 to 2000 rupees and rupees 1, and the coins are printed by Government of India. Even the Government of India prints it, it is done through RBI only. It acts as a banker to government and other banks, as I've already mentioned. RBI also takes deposits from the government, state government, as well as the central government, and as well as the other banks. Maintain reserves. Reserve Bank of India always maintains certain reserves for any future natural calamities or due to economic pressure or economic um, uncertainty. Due to such reasons, they keep a certain amount, a certain percentage as a reserve so that it can be utilized at a later stage. Formulate monetary policy. The Reserve Bank of India is the bank which formulates a monetary policy for the government of India as well as other banks. Monetary policy is nothing but the policy is anything related to money. Collect credit information. So the RBI has the power to collect credit information from other banks. If they want to know how much of money is being credited to an institution or any individual or any organization, RBI can collect that such data. This will help when such money is being credited for any organization which works against our national interest. Apart from those functions, RBI also has other functions such as registration of NBFC. NBFCs are nothing but non-banking financial corporations. They also regulate the functions of non-banking financial corporations. In conclusion, financial management of the country is in the hands of RBI. It also regulates the functions of the banks and the financial institution. That's all. I hope you guys understand this. Please put your comments below. Thank you.